What's up, traders? TK Profit of Joie Capital. In this video, I want to cover EURUSD and do technical analysis on it from the monthly to see what is the overall direction on EURUSD, and also dive down into the smaller time frames to find a trade setup on this pair. So, the first thing that I always tell my students is to identify what you see in front of you. What trend is the market in? What stage are you in? So for starters, we'll just mark our lows and our highs. So for my monthly, these would be the key areas for the lows that I would look at. Alright, we're marking the highs now. And with doing this, it helps you keep a visual of where the market is and what the market is doing. For starters, if you're looking for an uptrend, you would expect price to make a high, higher lows, higher highs, higher lows, higher highs. That's the definition of an uptrend. Vice versa. For the downtrend, the market needs to make low, lower highs. Oh, that was an accident. But lows, lower highs, lower lows, lower highs. All right. So that's the purpose of doing this, to see exactly where we are. So far, we see that the market is making lower highs and consistently making lower lows. But at this area, it is retesting a high. Okay. From here, we have a higher high than this one. So another thing that I like to do is just look at the fib on the macro level. So what I fib from this swing low to swing high, that's cool. We can see that price pulled all the way down to the 786 before rejecting to retest this 50 before it failed. After the fail, it came back down to retest the 786 again, but we see that this double bottom that was printed here, boom, this double bottom was retested by price retesting this zone here. So when we have a big swing like this and price drops all the way down to retest the 786, retest without breaking, then I'm looking for the highs to be retested if not broken. At this point, we already have this rejection at the 50. So from here, if price holds at this 618, we would assume, since an uptrend would be price creating higher highs and higher lows, that price will give us a higher high here. Now, again, this is the monthly chart. Wrong tool, trend line. All right, this is the monthly chart, so will take a little while before this move completely plays out. But it's just something that I like to do before finding trades, which is finding the overall direction. So again, based on our monthly analytics, prices continuously making lower highs, and at this point we have two higher lows. So we're trying to figure out what is going to happen with current price movement. This was the last rejection area right here at I-50, so we'll mark this. All right, this was our buy zone. Okay, now let's go down to the smaller time frames and see what we have. Okay. Normally, when I see range in the market, And what I mean by that is the areas where we have pretty much consolidation with prices making relatively equal highs and relatively equal lows. These areas I identify as liquidity areas, because most people that trade, we see areas like this and we place our stop losses underneath. So those are areas that I watch. I watch these areas just to see if they're broken. I like to wait until areas like this are broken to enter the market. So after everybody else gets stopped out, I may jump in shortly after to take advantage of a trade. So let me see. Now, let me see our macro fib. Let me use a fib from the swing high to swing low to see where it rejected. And I'll move this fib to the left so it won't be so crowded. Okay, again, we gotta pull back to the 618. And now price is fighting to stay above the 382. That's nice. And as far as our RSI, we may need a few more touches, but we got a little slight divergence printed here. Price moving up on our RSI, but price moving down, which means that this could be a good area to look for a reversal. Going down to a smaller time frame, let's see what we have. Okay, if I'm not mistaken, this was the 382. I like this. We had a pattern printed right here. If price retests the 618 again without breaking at this level, there's a good chance that we could get that reversal that we're looking for. Price broke this structure, came back to retest. If it continues to drop, maybe we'll look at this area as our rejection zone. Now, the way I trade, I always look at the possibilities for both sides. So, just in case, oh wow, price really retested that there. Oh, on a daily. Ooh. So this thing could rip from here. I'll probably send this trade out. Oh, I did not. Yes. So if price holds this area based off of the macro outlook that we had, a target area that's above this zone, since the 618 was played already, would be the 786. Let's see what we have there. Honestly, like this area a little more. But going for the 786 right underneath this resistance area, that's not a bad target point either. One second. Alright, so this is a strong resistance area right at the 382. Let's go down to a smaller time frame to see if there's a candle back in the past that will support one of these target areas. Alright, right in between the 786 and the 382, we have this level, or this candle that falls right underneath this resistance area. So I would play this candle for our potential target area if the buy plays out. Cool. So if this buy plays out, we're looking at this for our next target. Well, one of the next targets. Let's see. This could be our TP1, retesting the highs. We'll put TP2 at the 618 because price almost reached the 618 but failed to completely touch it. So we'll put TP2 here, and TP3 will fall right on that candle that we just used to identify the final target area. Alright. TP2. TP1. Alright, so based off of the macro moves on EURUSD, again, if price holds above the 618 level, then we can expect price to create a higher high based off of the rules of an uptrend, price creating higher lows and higher highs. Price was in a downtrend until it reached this point. With this last rejection at this area, that's what gave me the idea that maybe we could get a break above these highs, since we have valid support right here at this area, which just so happens to be our 618. So from here, we'll just have to wait and see how everything plays out. As of right now, on the 4 hour, we have an engulfing candle right out of that zone, which is nice. So if price can break back above that 382 and close, that would give us a nice little indication that this trade setup could actually work out. From here, it looks like we have a double bottom printed on a 2 hour chart. Close above, maybe a retest and a break above. That will be added confirmation. So thank you for your time on this chart setup. Oh, I forgot one thing. Let's say, for instance, price rejects on us. We may get a rejection at this level if price continues to go on for a sale. And let's just say that was the case, all right? So what we would do is take off of this this tool here. Where's my short tool? We would look at this area for a potential short, but waiting on confirmation, because again, I said we have a lot of stop losses below this area because all of the rejections here. So with all of the rejections and liquidity in this area, there is a chance that it could be broken. Now, if it's broken, what could we be looking at for a potential target area? Let me delete this fib, and we'll take a fib from this swing low to swing high. Cool. So, based off of our fib, let's see if any of these levels look interesting. Right here at this 618, we have a lot of liquidity. A lot of touches, Again, I don't just trade to liquidity. In most cases, I look for areas like this to be broken. But we had a strong rejection at the 718, and like I said, if price holds above here, it's off to the races. But just in case we get a pullback, I would probably be looking at the 786 again. Give me 1 second. Yeah. Looking at that area with all those stop losses underneath it to be traded through, not to. And again, this is a just in case. With my trade setups, I only risk 3% per trade. So for example, no matter how many pips this stop loss is, I would calculate the risk based off of the total amount of my account. So if you have $1,000, you do 3% risk based off of that, vice versa with any other amount. So if this buy doesn't hold, we would lose 3%. After the stop loss gets hit, price more often than not retests the last support area that it just broke before continuing the downtrend. So the way we would take advantage of this is wait on the retest. If price breaks through our support level, we'll enter in on the retest here, and we'll ride the sell back down to this level. So when you look at the possibilities for both sides, you remain open-minded and you don't confine yourself to one bias, because the only thing that technical analysis does, it gives us an edge, or it gives us an edge based off of probability. So with the technical analysis, we have a high probability of this setup playing out. But if it doesn't, we don't want to blow our entire account just because we learn how double bottom works. That's not what we want to do. Some double bottoms fail. Sometimes, even though you have strong rejections at those areas, depending on what comes out in the news or what the traders do, the trade may go against you. So always protect yourself and use proper risk. I like to use 3%. That's what I would recommend, especially for traders, period. Some people, you want to start off with 2%, that's fine. But anything higher than that, you really can't afford to lose too many trades. And most people, as far as their win percentage, it's just not that great. We've been blessed this year to be averaging 70% every month, but that's exceptional. Most people, it's around 45%. But even if you use the risk ratio that we were just risk of 3% that we were just talking about, and making sure your risk ratio is at least 1 to 3 per trade, then you will always be in a position to where you'll have a profitable account. This particular trade is 1 to 16 if it plays out for the risk ratio, and we risk 3%, so that's 3 times 16 for the risk ratio on this one. If this trade does not play out and it comes the sale is activated, or price breaks our support level and goes into a sale, the risk ratio on this trade would be 1 to 12, which would be 3 times 12. So thank you for your time. Again, risk properly. I hope everything makes sense to you. And this is what we're looking at as of right now for our major swings on EURUSD. And let me send this trade out to my group, and see you guys later. Happy trading.